Hey, good morning, everybody. Trendy John here from Simpler Trading. Let's go ahead and get started with this week's broad market analysis. We'll be looking at the dates for tonight. Futures will open here Central Time where I am at 5 o'clock. That's the 22nd of June. I can't believe we're right around the corner from July, and I'm ready to celebrate July 4th already. I'm super excited. And then we are pushing into 27 July. No holidays this week. Matter of fact, we got some big catalysts coming over the weekend. I'm sure a lot of people are anxious and want to see what kind of impact that has on the market. At the moment, I'm just seeing that the crypto market is down quite a bit, but also doesn't look too bad. A lot of the technicals said, hey, there's reasons to be a little cautious here, but there's also the big technical level that I've been talking about for several weeks. As long as we stay above that, I remain bullish and I remain in by the dip cycle. Okay. Now, those things could change really quickly tonight. Again, we'll see. And hopefully, the levels that I'm able to go over with you today can help you in case there is a lot of anxiety that comes from a big push down or maybe even a big push up. Okay. So we're going to get started here, but before we do, go ahead and hit that like button. I would really appreciate it. Let's go. All right, so the first thing we're going to look at is this week's major U.S. economic reports and Fed speakers. The reason I use this is because it's catalyst that pushes price into our levels, and our idea is to find levels before prices get there so that we're prepared to take action. Okay, and a lot of these can cause some volatility. So you'll notice that I have these little green dots over here. These are just things that in my head, again, are those catalysts that could create some volatility. Obviously, the the news catalyst of Iran is going to create some volatility. So I don't think we really need any of this stuff in here to to create that. We're already going to have some volatility in the market. S&P Flash U.S. Services PMI comes out. These are Eastern time. And then we have existing home sales at 10 o'clock. And then Tuesday, June 24th, we have S&P Case-Shiller Home Price Index. We have consumer confidence, and we have Fed Chair Powell testifying to the House Financial Service Committee at 10 o'clock. On Wednesday, we have new home sales. Thursday, Friday Eve, advanced U.S. trade balance and goods, initial jobless claims, and GDP second revision. On Friday, June 27th, consumer sentiment, and then we have core PCE. So again, I mean, to me, pretty quiet as far as this stuff is concerned. But again, I think the big catalyst is going to be tonight on the open. Okay. Next thing that we want to be looking at is we use earnings, and I love to use earning whispers out here on X because it's always been super reliable, and I've been using them for many years to glance over and see who's reporting. I love to trade into earnings for specific names if I find setups that I believe are um, advantageous to my style of trading. I'll trade debit spreads on either side, and that really is something I love doing and that I taught about several months ago here at Simpler. This week is still pretty quiet. I think we're getting ready to hear from financials and so forth, but there are some names on here that I'm definitely interested in. The names that I'm interested in Tuesday would be FedEx, and that is after the close, and then BlackBerry. Just kidding. Wednesday, looking at Micron. This was a really big trade for us here in the room, at least for me, anyways. It did really, really well. And they report, and I'm very interested to see what happens here for MU. I love the chart long term. So I may get myself back into this trade to trade into earnings. And if I hit the right side there, which I'll probably do puts and calls. Like I said, I'll do debit spreads. But if I build some money from that, I'll use some of that money to put me into a trade that probably I would say expires. Mid 2026 or so. So a little bit longer approach, if you will. Moving on down or across, looking at Thursday, we have Nike. Nike was one of the leap trades that I took this year that actually there was a period of time where it looked really good. It doesn't look terrible. I am down in it, but just a little bit. Like seriously, probably just a couple $100. It just has not done a whole lot, and it's pretty disappointing because we were coming into this year 3 years down. And looking in the past, I believe I saw that Nike has never been 3 years down. There was some structure and some things that I was looking at to see if we could get that balance, but it just hasn't been a bounce that's been stable. And so a little disappointing, but we still have a lot of time. So I still have 7 months until my options expire there. And again, like I said, they're not terrible. So I'm definitely interested in what Nike has to say or how they react to their earnings. Okay. Far as earnings, that's all I'm really interested in. Some of you may like to hear from Carnival, and that is before Tuesday's open. And then, of course, KB Homes. This is interesting as well. So I should have probably said KB Homes for tomorrow afternoon. Okay. Next thing we're going to be looking at is SPY, the bigger picture. I like to use the quarterly candles here, and you guys can see here on Thinkorswim on SPY using the quarterly. Absolutely looks beautiful. And one thing that I like to point out, is anytime that you are a new trader or maybe you've been trading for quite some time, is just to go back since the inception of the market, meaning go back as far as you can and look to see if your indicators are working. For example, for me, every time my buy signal comes up on a quarterly candle, how many times does it actually work? I mean, if I see this candle, or sorry, see this signal, and then prices go up from there, hey, it worked. From here, it worked. Here, it worked, right? Keep going. Here, it pulled back 1 quarter, right? Then we get it here. It continues to work. Notice how the cloud continues to be support every time price comes back down into it. Okay, and we just kind of, look at these things and then I start to build confidence. I say, hey man, every time that I see one of my signals pops off, I actually have a high probability on these green arrows that price will continue to the upside, right? What about the blue arrows? These come from compression, right? So if, the blue arrow pops up and then we start to see moves to the downside, how often does that work, right? Doesn't work. Works just a tad, works a little bit, and then it comes right back at you. So sometimes I may assess that, hey, these candles, or sorry, these signals are a lot better than the other signals, or hey, every time price comes to the cloud, it works a lot. And that's kind of what happened in this quarterly candle. And speaking of, we only have 8 days left until this candle is finished. And a lot of things can happen. I always say timing is the variable. Things can look beautiful, and then before you know it, things can change very quickly. This is a very bullish hammer candle. It's over the body of the previous quarter candle. It has moved from the lower trendy edge all the way up to the upper yearly edge, and that was a very bullish sign that I continue to say I'm bullish as long as price stays above that. And coming off of last week, you would remember that I said, hey, as long as we stay above here, I'm bullish. And that level is around 593. Now we are teetering on that, right? And let's just think about if we open up tonight and say we gap down, I don't know. I'm just making up a number. 100 points in the ES futures, that would be $10 in the SPY. I have to think in my head, if we were to do something like that, this is 594, that put us at 584. Is 584 significant? Let's say 200 points, right? That'd be $20 in the SPY. We'd be looking at 574. Is that significant? And it is. 574 is definitely significant because it is the support level of this big rally that we've had, and that's the bullish channel using our Fibonacci's. So in the event, if we were to pull back, below 576, somewhere in here this week, I feel as for me, that would be a buying opportunity. Now, for me, when I say buying opportunity, that may only last 2 hours, it might last 30 minutes. It all is depending on the conditions that I'm seeing, the volatility, and also my expirations if I'm using options, right? If I'm doing equity, there might be a different approach and so forth. Let me go ahead and read these notes to you. 8 days left until the quarter candle closes. At this time, it is a high probability for me that the candle closes as a bullish hammer close. I would love to see the close above the yearly edge, okay, which is this blue line there, which is around this number here at 593, okay? But it's still okay if price closes in the previous quarter candle. So the close, all we got to do is draw a line on that portion right there of the previous candle and a line right here, and I'm still happy if we close in there. And it's kind of ironic because I wasn't thinking about an inside candle for this quarter, but if we do an inside candle for this quarter, then obviously going into the next quarter, we could be looking for an inside and up or an inside and down formation that ends in the October November timeframe. So I wasn't thinking about that before, but it is something that could happen. And even if we have some sort of significant pullback, again, I believe if we could stay in the gray zone before the end of the quarter, that's a really bullish sign. Okay. This is the quarterly candle. And again, guys, it's the bigger picture. The way that I like to use it is to kind of gauge where I want to be net long or net short in my portfolio, or perhaps just, the market is typically always bullish. So in this case, I just have levels where I want to add into my positions when we pull back. Okay. Now, this is the quarterly look. The next look that I want to show you guys is the weekly. So when we come to the weekly, you guys will see that I have some positions here that I have on. I have some protection. These are a lot more expensive, and these were way out of the money. Buying these calls right here is just saying, hey, we talked about I believe I've talked at least for the last 3 weeks on my probability of 95% that we could see all-time high because we got over this blue level, or actually right above this, we had the 88.7. And as long as we're above that, I was looking for an all-time high. But the big variable was that we needed to see 3 weeks above this edge, okay? And guess what? We had 3 weeks that stayed above it. Okay. Now, it just so happens that we have a big catalyst out. So it's going to be really, really fun and interesting this week to see what happens, right? A lot of things are saying on the SPY chart that, for one, this is an inside and down formation, that what was resistance came back to test and could be support. Again, we'll find out tonight. Or we're just going to continue that inside and down and perhaps move back into the 9 EMA or the support area that I was just talking about. Okay, so some major levels there. This, again, on the call side was me saying, hey, if we see this level here, the probability suggests we can move up. You make a new high. I'm usually not looking. It could be a couple pennies and then price would pull back. Okay. So this is what that scenario is based off of. And this scenario here is based off the fact that some tensions came in. My portfolio is more on the net long side and I want to protect myself a little bit. Okay. So that's what that is. Let's go ahead and now move on. All right. Well, let me make sure you understand that we stalled here. And again, what was resistance was support on Friday. The 9 EMA is around 583, and again, support around 577. So this is the area I'd be interested in buying if we were to pull back for myself. Okay, let's go ahead and go on to our next ticker, which I like to use, and we'll start with the quarterly once again, right there is QQQ. We just find that these are the major that a lot of people trade. So I've always just used the Qs and the SPY. All right. So we'll go to QQQ here. If it pops up for us, there we go. All right, there's the Qs. Same thing, looks absolutely stunning. And if we go back and we study and we look at since the inception of the market, we could see that our indicators are doing really, really well. Probability suggests that they're on point, you know. And again, this last quarter, we pulled back into the trendy edge. We pulled back into the cloud. We found buyers. Prices continue to push up. Notice that price is above the yearly edge. I love that. Far as 622 goes, 8 days until this candle closes, just like the SPY. Probability suggests this closes as a bullish hammer candle. I prefer to see this close above the yearly edge, which is the blue level at 522 and some change. Um, but it is also possible we could close in the previous body close. Again, 8 days. So even this week, going through this week, we still have to wake up, go through the weekend, and see when this candle closes where we are. So I say a higher probability that it closes up here, but again, a lot of things can change. Okay. This is the quarterly candle. Let's move into the weekly candle. On the weekly, you guys can see this is an inside and down. Actually, if you open this really wide, it is an inside and down formation. And when we start to roll over, start to have topping wicks, just like on the SPY, we start to notice that your bears are basically putting in, a level and saying, hey, we're not letting you get past this. So we're kind of stuck between a high and the bears. And then we have that yearly edge, just like we had on the SPY. We did not test it last week. We could be trying to come down and test it. So if we were to gap down and it's not that big of a gap down and we were to get into 522 area, 523, we want to see can that level hold. If things really gap down big and start to continue with aggressiveness to the downside, then I would be looking for 9 EMAs and so forth. Okay. So again, paying attention to this. Now, one thing that I did do over the last several weeks, probably I guess about a month and a half, after we had gapped up, you can place or anchor your Fibonacci's from that gap and go ahead and place them to this pivot high, and you can apply the trendy Fibonacci. And again, that bullish channel, you can spot that and just know where your levels are. Okay. Overall, though, things look great. Again, catalysts are just reasons, news are reasons to push price to our levels. We're finding those levels in advance. I'm talking about them now so that if we get there, we have a plan, and I'll be here live with you guys in the room to go over how I would approach that, and Melissa would do the same exact thing. Okay. So this is what we have so far. And overall, I am bullish. All right, as long as prices stay above those edges. And I'll talk more about that on the futures side towards the end of this video, which we're getting closer. But before we do that, let's go ahead and remind you, please hit the like button. All right, it just takes 1 second, guys. Just boom, hit it. And it allows me and makes me feel awesome that I wake up on Sundays and I do these videos, and I know that you guys appreciate them. So thank you so much for the support. Thank you for hitting the like button and giving me feedback. It always helps. All right, so the next thing we're going to look at is going to be the dollar. Okay, and the dollar, pretty straightforward. When we look at the dollar, we are simply saying, hey, if the dollar starts to bid, buyers come in, and starts to pop. A lot of times the market will pull back a little bit. And when the market is driving to the upside, a lot of times the dollar is moving down. Now, there's correlation a lot of times, but sometimes there's not. That's just the ebb and flow of the market. So just because the market or the dollar looks like it's about to go bid doesn't mean the market has to go down. It's just that I've always noticed that the probability suggests it will. So we've had this green zone, we popped, but this cloud is resistance when it's above you. You can see that I'm starting to get what's called trendy turn signals, the yellow, and we are at a level. So therefore, I do take this serious. The dollar can push up, and if it does, it could see 100.5, 102.36, and 103.85. Quite frankly, I'm just not that concerned though, unless we get up and over the 38.2. All right, but just know temporarily, if it continues to build up and push this way, things could look a little bit ugly in the stock market to the downside. Now, my overall thought is the same it's been for many months. If we take out 97, I am looking for this lower buy zone down here between 96 and 94. Okay. The next thing that I want to look at is going to be the TNX, or the 10-year Treasury. So nothing changes here. You guys have noticed that the zones that we're using have been working for a very long time. So once again, technically, I see this moving towards 3.8. Like I said last week, we got so close to my target that I keep saying it, and I'm wondering if I already hit my target and I should be satisfied. So really, the information that you all uh, would hear that I think you could take into consideration. As long as we're between these, I just think that the 10-year treasury continues to do this. Okay. It's not until we break above this red zone or in this green zone that I really need to do anything, but just take note and understand that this is basically our playing field. Okay. The next thing that we look at is going to be the skew. Okay. Now, the skew is an indicator developed by the CBOE that measures perceived tail risk. Okay. And the way that I use it is in conjunction with everything else that I'm showing you. All right. And there are levels to this. And the idea, and it might be hard if some of you guys are new, if you place a SPY chart behind this, which you can do, you just come over here and I want to say, you might go to studies and then you add study. And then you would compare with. So right here, all right, and you go to compare with, and then you could put in a custom symbol and you would type in SPY. Okay, and then what that's going to do is put the SPY in the background. And what you'll notice is that when the skew is pushing to these upper levels up here, all right, then the SPY is a lot of times really high up, all right, on the curve. And participants are getting very comfortable with just buying calls, closing their eyes, throwing a dart, hitting the balloon. It's like it's so easy, right? And the skew is letting you know that hedge funds are preparing for risk off. And again, this just kind of helps me with my portfolio. You'll notice that the skew pushed up pretty darn close to the risk off area and we started to pull back. I like to look at things in a Fibonacci way every time I look at stuff. So I just take this red, I take this green, and you notice when I anchor these between the risk on and the risk off, we're at a halfway point. And that makes sense to me that, the market cooled off just a little bit towards the end of the week. All right. If you were to look down here, this is when the SPY in the background would be moving to the downside and where a lot of fear comes into the market. And again, we're using it in conjunction with our levels to provide a good entry point. And my big takeaway from this week is that a lot of what I'm seeing in the market is suggesting that it is going to be noisy. We're basically stuck between major levels, right? Major levels, but we're not at the level. And a lot of traders, whether this was a chart of Apple or anything, when we're in the middle, you heard the saying, don't diddle in the middle. And it really holds true because we find ourselves speculating. And you can understand this. We're in the middle and you have to guess. You're like, do we go up here or do we go down here? And when we do that, we find ourselves pressing to one side. And if we're wrong, it can really hurt us, right? In my opinion, it's always best to wait and be patient for a level to give you that signal to either go long or go short. Speculation's okay though. I'll speculate sometimes as long as my allocation is lined up with speculation. Okay. Speculation plus allocation equals small. You know what I mean? Like that's how I look at it. I don't want to get too big and over speculate and then ruin my entire year, my week, and so forth. Okay. The skew is telling us at these levels, at at the moment, it could go either way. Okay. It is a little higher up here towards my 165. Okay, but currently closed down here at 149. So a nice mid, if you will. So let's just be patient. Remember, it's just a useful tool though for gauging market sentiment. And again, I use it with everything and I never really just look at the skew and go, okay, this is what I'm doing unless I say differently. Every once in a while, we'll hit a level right here. It says risk on 5 days, and then I'll look at buying calls for at least 5 days out. If we're down here and the world seems like it's coming to an end, then this is the area that I want to be buying at least 30 plus days. And I need to change that. It probably needs to be more like 60 days, But with the way volatility's come into the market over the last couple years, the 60 days just feels like too long to wait because a lot of times we're getting reactions so quickly. All right. So this was just like a gauge to keep me in the trade for a little bit longer. But if you buy too much time, sometimes it's just like the returns are not as great. Okay. Anyways, just a couple things I was thinking out loud here. All right, so the next thing that we're looking at is the fear and greed index. When we come down to the fear and greed index, you're going to notice that we stalled at 55 this week. We were a little bit on the greed side last week, and now we're at neutral. And, depending on tonight's open, could push us over to fear or perhaps even back to the greed side. But we're at a neutral state. And one thing that I was thinking this morning is that this happens a lot before we go into earnings season. Financials are around the corner, and the market itself is starting to gauge or teeter into the neutral side. And then we wait to hear from reports, right? Goldman Sachs, JPM, all the big banks, right, are going to report. And it's nice as a trader to be more at a neutral stance than for the market to be extremely greedy going into earnings. Just something I've always noticed, and it again is my own opinion. Okay. So everything's looking pretty normal to me. All right. The next thing that I'm going to be looking at is the ES futures and the NASDAQ futures. One thing that I want to point out here, if you guys are new at the Trendy Room or you're new here listening to me, don't be discouraged about futures. Futures, I believe everyone should learn to trade futures. You should learn about them and understand a chart's just a chart. Futures are a leverage tool. It's a way to be or participate in the market at a much lower cost basis than buying shares. Okay. So, for example, the ES futures, when I pull this up, when we're looking at the ES futures, one contract equals, and we're talking about a mini contract, one contract equals 500 shares of SPY. So, a lot of people don't have the cash to buy 500 shares of SPY, so they like to use futures. Okay. That's just, a little bit of information that you may not know. I like the futures because they show me the future. So, and I like them because you can also use the futures to hedge your account. So if the market dumps, and for example, I'm actually in a short on the ES futures using options right now. And if we were to dump tonight, say 150, 200 points, I'm going to get paid. All right. So that is something I like to do. I can hedge my portfolio when, if you're only trading options and equity, you may not be able to get out of your stuff at night, right? Well, we know with options, you're not going to be able to get out of your trades. So you got to wait until the morning open. With futures and future options, I can actually trade through the night tonight. Okay. So, big reason why I like to show you guys this because we still trade the futures here in the room live, I think every single morning, probably at least for the first 30 minutes or so. It's just part of our routine. So, futures in the morning, also trimming options and equity and stuff like that, but showing everybody how we trade futures as well. Okay. And then we get into our other trades after that, after the markets kind of calm down a little bit. So what I'm seeing on the futures, and I'll give you my overall sentiment. I'm bullish as long as price stays above the upper YE. It's that blue level right there. Okay. And to be fair though, even if it breaks down below using trendy methodology, I'm still bullish as long as price can hold this green level and this white level here. So the bull channel, which is right in here, and you guys can see those numbers. Okay. So it doesn't mean that I won't get short or, I'm still staying in those SPY puts or my ES puts to the downside. This stuff is really important to me. All right. So it doesn't mean that I won't do things differently, but what is important is the bigger trend. And although people may be freaking out if something bad happens, I'm still thinking of buying the dip as long as we stay in here in the bull channel. So these numbers are really important going into this week. I don't know how things are going to shake out, but this is the bull channel. But if you're cautious and you want to be more, I guess, active and more aggressive, instead of waiting for, here to get long, we have traders who are, want to short and be intraday short. This is why I'm using this level here. Okay, and that's 59.99. It's the same one I've been giving you for the last several weeks. Okay, we're over it. I'm bullish. We're under it. I am intraday bearish, sideways to down mindset. Doesn't mean I won't buy the dip at levels, but just understand that's my over under. Okay, let's go into the next thing that I'm noticing here on the weekly would be that we closed on the ES futures, not the ESU 25. On the ES futures, we closed inside and up and above this level. And just like the SPY, we had this 9 EMA that at some point, price always comes back to the cloud. It's just timing is the variable. And when it comes to trading, timing is everything, right? Well, it can be. We don't need to get into that, but this is a big thing. So we know that this 9 EMA will catch up with price, or price will pull back to the 9 EMA. Which one will it be? Okay, let's move on. Our next chart is going to be the daily. The daily looks a little bit different than the weekly, obviously. The candles look different, but the way that I set up our levels looks different than this. Okay. These are triggers. When price comes to these levels, I look at them and then I look at smaller time frames to assess whether or not I want to take the trigger. So some say long, some say resistance, and some say short. Okay. These are not my only triggers. There's also triggers that we have on our intraday charts that we start with every single morning. They look different than these. Okay. But this is the bigger picture on the daily using levels, and you guys can see those. And if you want, you could put these down and see how they work this week. Okay. Moving on, this is a 4 hour. Couple things that I did here was show you that this is the upper weekly edge, which is this level. This is the lower weekly edge, okay, which is this yellow level. We have a monthly edge that is here. This is our support within this level. This up here, guys, would be our resistance in this area. And everything between is just more of an intraday strategy. And I'll have those charts for you guys tomorrow morning. 30 minutes, or actually about an hour before we even get started. You guys can check those out. Um, but we're basically in chop. Couple things I do want to say though. If we gap down and we happen to be down here, I'm looking to buy the open. If we gap up and we happen to be up here, I'm being cautious to the upside and maybe taking some profits if I'm in some longs. Okay. Everything between sets up from an intraday strategy. Next thing I'm going to look at now is going to be the NASDAQ. And then after we're finished with this, everyone, I'll go over Bitcoin really quickly and then we'll be finished. So just stick in there just a few more minutes. NASDAQ futures weekly, inside enough formation. Same thing. We're above the yearly edge. I'm bullish as long as we stay above that. Temporarily, if we're below it, it's my over under. I am looking for sideways to down. Some areas that we could be pulling back to could be the 9 EMA. Okay. But also using the daily for some quicker triggers. I'll get to that here in a second. Same thing. We have longs, or sorry, the all time or the high. And then we have topping wicks that say, hey, slow your roll. And then we have this, which would be a reversion back to the mean, back to the 9 EMA to kind of reset things. Okay. If you guys are looking for shapes in here, one of the big things that I noticed several weeks ago is we had like this inverted head and shoulders, but we never really like in this area came back to create something here and then move up from here for it to look like this, right? Kind of like a smiley face. So the question is, if we come back down to here, again, it would be falling into a lot of confluence for me. We would be getting maybe that gap fill, falling into some Fibonacci support, falling into some structural support, where it just all lines up for a possible buy. Okay. Let's go ahead and go into the daily here. You guys will notice, again, we have the triggers. I have a resistance, I have a short, and then I have some areas down here where I would try to get long if the lower time frame supported that idea. Let's go ahead and move on into the 4 hour. Same thing. I'm showing you guys where the edges are. Okay. Showing you where the monthly edge is, and same thing. Our edges or my indicators are lining up perfectly with support and resistance levels, with structure, with Fibonacci. It's just all working out. So these are my major levels that I am at least identifying if we get that gap up or gap down. If we move down into these levels, I'll be looking at buying the dip as long as the intraday smaller time frame is supporting that idea. And if we were to gap up into this level, then I would be cautious of getting long because, again, resistance and support in here. If you look at price, we're basically in the middle. Don't diddle in the middle unless you got a great strategy for intraday trading, which we do have. And again, if we're in here tomorrow morning, we'll use our PMZ and all that great stuff. If we gap down here, then we'll assess the situation and I'll talk about it before we open up tomorrow. Okay. Next thing that I want to be looking at is going to be Bitcoin. So Bitcoin, currently, the last time I looked at Robinhood, anyways, I keep getting, it's now below 100,000. Now it's below this. So currently, we are. Give me 1 second here. And one thing I've been noticing is when I open up my Robinhood, it's a little bit slower sometimes. Um, just trying to see where we're at. I don't know if this is accurate or not. I don't see the numbers moving, but the last time that I am seeing a number, it's showing 100,571. But on my phone just a few minutes ago, let's see. No, that's right. Okay. Yeah, so it looks like it's about 100.5. So this is important because I have been concentrating on the quarterly candle because I have a long-term Bitcoin position. I'll give you some insight to, some faster stuff if you're just kind of interested for the week and so forth. But my whole thing is just looking at this chart here. As long as price stays above 95,000, I'm happy. And really, at the end of the day, this rally, if we were to come back and measure, where this rally started kind of from here to here, again, looks really bullish as long as we stay above 88,000. So I'm not really concerned about the pullbacks and, but crypto is maybe telling us that perhaps tonight could open up down at the moment just because I keep getting all these alerts, maybe risk off at the moment. Okay. But again, I would concentrate on 95 and above. And if we were to get back to 88, in that area, I'll be adding back more into my long-term stuff. Okay. My 2025 projection is still 138 by 167. And then let's go to a smaller time frame, just kind of see what's going on. The market's just been dead chop, man. Right? A lot of top and wicks. These top and wicks, I got a video out there on YouTube you can watch. This is the first sign that the market's going to stall and go down, sideways to down. You can see it's come back to the 9 EMA. If it's indeed below 101,000, that means we're underneath the yearly edge, right? And I was giving you guys the example of Bitcoin, how it was a 95% probability for me that we would see an all-time high. We made that high just a few points above, and now you guys can see after that high, it probably caught a lot of people, buying at the top, and now we're just kind of throwing those people out, the weaker hands, if you will. All right, there are some bigger candles down here that suggest if price were to come back down, we should find buyers in this area. And again, that is lined up around 88,000 or so. All right. So overall, my sentiment going into this week is bullish as long as we stay above those edges that I went over with you on the SPY, the ES futures, the QQQ, the NASDAQ futures, and right here on Bitcoin. If we are underneath those edges, I am temporarily, I wouldn't say bearish, but I'm looking for the market to go sideways to down. And then I have levels below that were deeper that I would be looking at scaling into longs. Again, I'll be updating every single day before the market opens. Melissa and I will be on the mic with you 30 minutes before the market opens to go over our plans. We do futures trading, equity trading, options trading. We do it all. And we can't wait to trade with you. Have a beautiful Sunday, and we'll see you 30 minutes before tomorrow's market open. Have a good one.